Welcome back to Weenie Trades. In this video, I'm going to be giving a technical analysis of Hut 8 mining, BBIG, and then Bitcoin. Then I'm going to be talking about a few swing trade potential ideas for the upcoming week. It's going to be a long weekend, Labor Day weekend, so it's okay to it's the time to just relax just a little bit and take some time away from the markets. I'll be using Heikin Ashi candles in spirit of Fun Friday. So Hut 8 mining, we were in this channel, if we see over here. Look at this. We're making higher lows. We're making higher highs. We're in this defined channel where we can clearly see that our lows are bouncing off this support level and our resistance is off of this top level. Once we start to break that channel to the upside, that started to happen on Thursday, while Hut 8 really started to take off and really start to go parabolic. If we're looking at Heikin Ashi, no red candles. So it's basically saying, oh, the trend is still up, which is awesome. So if you're using Heikin Ashi on Hut, you're killing it on the daily time frame. If we look at the hourly time frame, nothing but higher highs and higher lows. So we're in blue sky breakout. I do think that we're a little bit up there on Hut, and I think we could come back and test the support level down here at 950. That would be a potential dip buy. So we hit 950, we sell off. If we come back into 950 from the top side, there's more likely going to be a bounce than not. Again, there doesn't have to be a bounce. It can keep on dropping. But that's just an area that I'd like to watch how it reacts. So I'm going to set an alert at 950. And then if you're really aggressive, you can buy the breakout. A breakout is a breakout, but how much further does it go? We're already up. Once we're already up, breakouts tend to barely go and then snap back in. So you could buy Hut 8 over the all-time highs. It's a little bit more difficult to manage risk if you do so. So that is Hut 8. Next up, we have BBIG. And if you watched my technical analysis video on BBIG earlier, I said BBIG, from this level up here at about 10, we're likely to go sideways to lower. Well, BBIG went sideways for a bit and then went lower. And if you watch the second update of BBIG, I said probably going to go lower to sideways. So we did exactly that. We dipped lower in the day, and then we just kind of like had a small little rebound. If you look at it at the intraday time frame, BBIG had a big squeeze, but then we started to hit a lot of resistance, and on Fridays, we tend to revert back to the mean. What does that mean? Well, mark your low points of the day, mark your high points of the day. The mean, you could just, you could eyeball it, you could use VWAP, volume weighted average price, but you can just eyeball and say, hey, what's about the 50% range of the day? Well, there's our low, there's our high, we revert back to the mean. We revert back to the mean. That's what Fridays are for. So where's BBIG headed? Well, BBIG is selling off in the after hours, which isn't the best sign. Normally, you'd want to see a little bit more strength. I will say, though, that there's probably a lot of short sellers that are going to be risking off of this area. So if we can see BBIG get above 9 and hold 9, then yeah, there's a chance for another squeeze. However, the way that BBIG looks, so far, it looks like we might need to go sideways a little bit, but it depends on if we gap up. So if we gap up over 9, we could get another squeeze. It's still the less likely scenario that we've already had the squeeze from 2 up to 12. Generally, once you've already had the squeeze, it's done, and we zigzag and head off into nothingness. However, if you think this time is different, for gapping up over 9, that's a hint that we could start to rally again and over 10. Otherwise, we're likely to go zigzag and go sideways to slightly lower on BBIG. Next up, we've got Bitcoin, and Bitcoin has been doing very well recently. Earlier, Bitcoin had sold off quite a bit from the highs of 65,000. We talked about this bear flag, and boy, I'm glad I got out at 55K on Bitcoin. However, now that I'm seeing Bitcoin back at these prices, that's the thing about trading versus investing. If I'm investing, I'm just holding all my Bitcoin, not selling, which I am doing with a portion of my Bitcoin. But for my trading portion of Bitcoin, it's kind of like, okay, yes, we sold off for a few months, but now we're already back up. So Bitcoin on a tear. Me personally, I'm not going to be selling any Bitcoin up here, but short term, we could go sideways to pull back. This was a pretty strong supply zone. So supply, we sell off. Now we're coming to it from the bottom side. We're likely to go sideways to slightly lower. However, if Bitcoin can get above and hold above 52,000, then they could test the next resistance, which wouldn't be until that 56,000. And where am I getting that? That's this breakdown candle high. I'm eyeballing this candle right here. Even though it's a Heikin Ashi candle, this candle was the breakdown formation. Whenever you're revisiting a breakdown area, it's going to be a really tough spot to get over it. However, if the momentum's there, awesome. Otherwise, I'd love to grab a dip buy on Bitcoin at about 42K. I may or may not get it. If I don't, oh well. I'll just keep dollar cost averaging and accumulating Bitcoin as it potentially goes sideways over the next coming days and weeks. So bullish on Bitcoin and Ethereum long term. So that concludes the stock technical charts. It was a cooking Friday. Also, if you're looking for potential swing trade ideas, check out Sony. So right now I have this Sony 120 strike call. What's cool about this is that it expires in January of 2022. So I have the right to buy 100 shares of Sony at 120. Well, why would I want to do that if it's only at 108 right now? Well, if we look at the chart on SONY, Sony, we can use Heikin Ashi candles for this one. But Sony, still in a nice good uptrend. Lately we just started to break out over 105.50, and Sony is just really starting to get some momentum. If we look at the weekly chart, we could be breaking out of this weekly broadening range pattern. Otherwise, Sony, what I just like about it is that it's a nice good curling formation, pays a good dividend, steady uptrend, and I may or may not take profits on this early if market environments change. But Sony, I'm looking to add to Sony if Sony could come back to that 105.50 area just to grab a little bit of a dip buy. And then I also would like to talk about Square. I do think Square can really start to take off. Even though it's held support at that 265, 266 area. If we look at the weekly Heikin Ashi, it shows our green candles. I'm just using Heikin Ashi because it's fun to mix things up sometimes. And I don't see too big of a difference. But hey, it doesn't hurt to try new things. But I like to always say, if it ain't broke, well, don't fix it. But Square is still in that kind of weekly pennant. If Square can get above 277, 280, I do think Square can pop and see new all-time highs probably before the end of the year, given that market conditions are the same. So Square and Sony as a swing. If I really want to, I can always use the hedge as a SPY. The SPY is a hedge, not the hedge as a SPY. But, sell bear call credit spreads, something of that sort. Or, put debit spreads might be another way to go, just to hedge those Sony and Square trades. So thanks for tuning in, you guys. And Peter says, check out the course. Bye-bye.